Hi, and welcome again to another edition of Market Analysis for today, January 6th, Monday, January 6th, the first one of the year. I was off for Christmas holidays, so we're back, full swing of things. So I wish everyone had a fantastic holiday seasons and that you are ready for another year at obviously looking to make a profit in the CFDs market. I want to be able to remind you that my name is Giovanni Benacourt, and this is a recording done by Vantage Markets about 45 minutes prior to the USA session open. All right, so let's get with it. Let's just take a look. Let's start looking at the markets from a further point of view on a monthly chart, which is the furthest back we can go on the platform. So taking a look at what the entire year of 2024 was, it was actually a continuation from a previous year of 2023 of making obviously all-time highs. So if you take a look, here's where January from 2023 begins, and you see that previously the market was in a few months basically in a range on a monthly basis. Then right from January the market began just running higher, making higher highs. And if you take a look at this movement, we can and when we analyze what's called the Elliott wave theory, we see that the market made the first wave, then the second correction wave, and then the market basically has been on a upward trajectory. Now, analyzing or just based on this particular tool, which is the Elliott wave. The Elliott wave says that it has obviously 5 waves. Okay, within those 5 waves, we have 2 corrective waves, and then after the 5th wave, we do have a deeper correction wave. All in total could be 8. But if we count just for reference from the beginning of 2023, we see that this is the first wave. Here's the second wave, corrective wave, and then mostly of 2024, we have been on that 3rd wave, which is one of the longest waves that obviously is on the based on the Elliott wave theory. And here is January 1st of 2024, where the market obviously continued. See, in order to have a corrective wave, which like this one, we need to have 3 candles based on the theory, which is ABC, or the ABC candles, and then the corrective wave, and that the second wave can never be longer or go into the trajectory of the first wave. So basically, that's what happened in 2023. Then the market rally. Here the market began in 2024. Market rally obviously had a lower month on that month. So in 2024, we only have 1, 2, 3 months that were corrective months. Okay, so here is January 1st of 2025. We have began the month or the year in an uptrend. So let's take a look at what we can here come in and speculate regarding where the trajectory of the market will be. So obviously we're going to be having in a few weeks the beginning of Trump's presidency, which is pro-business. So that will be obviously helpful for the market. Then obviously for us to come say that the market will just plummet, well, we need to have obviously several reasons that which obviously they will come up into fluctuation. But a 10% correction can always happen. So that 10% correction is from the high that we made last month, and that high is 22,423.53. So if you graph that and you just grab a calculator and just multiply 423.53 times 10%, that gives you 2,242 points minus that. So 20,181, which is right above the 20,000 psychological round number. So can you expect for the market to do that correction? And if you take a look, the market has been around here and throughout several months in 2024. So initially we can come and contemplate that the market in the NASDAQ can come in and do a fluctuation to the upside momentum beginning of the year and take an attempt of reaching or revisiting that previous high done in December. Now, will things come out in geopolitical uncertainty which is still around, and will the tariffs take effect against the market and make that a market correction? Well, again, that market correction will be 10%. Now, in order for us to come and say, oh no, the market is going to be in a downtrend. Well, a downtrend is identified by a 20% retracement or move to the downside from that previous high, that all-time high. So that will make it, so if we again grab that 22,423.53 times 20%, that's 4,484 points, minus, that brings it all the way down to 17,938. So almost 17,000 points, which that will make it right around, that'll make it somewhere around here, around the 17,000, or just grabbing around numbers. So 17,000, when did the market was at 17,000? Well, guess what? It was when the year began last year. So are we going to retrace 20% in one month what we moved in one entire year? Well, yeah, the market can happen. That could happen. But a lot of bad things will mean to be happening. So for right now, just because of oil devaluation that the market is sitting on, obviously a great deal of cash, a great deal of money people have invested into the stocks. So that's what sustains the index, because the index is obviously a basket of stocks, of companies. So therefore, I'm going to speculate that the market will continue to move higher and looking to either revisit or take out that previous high. So that's for the NASDAQ on a monthly basis. Then we want to break that down and identify. So we can identify on a monthly basis the levels that could be possible levels of resistance and support. But we have, if you look to the past, the only level of resistance that we have is that previous high, because the market is basically revisiting where it was. So we might want to, in that month of December, go down to a daily. Prior to that, you may want to say, okay, so that all-time high is going to be obviously a level of resistance, and then 22,000 will be that second level, which is a psychological round number. So we'll make that a round number, right? Here we go, 22,000. So we found that first level of resistance, which is a level of a psychological round number. So how far are we from that? Okay, about 250 points. So therefore, that's how we're going to be able to set our resistance. Now, our support will come in two different ways. I like to use two supports. So the first level of support can be that low created last month. So we have the whole swing, the whole range of the previous month as levels of resistance and support. Now we have that level. You could do it different ways, but I'm just sharing the way how I do it. Then the second level, I like to look at places where there were volume clusters. And what I mean by volume clusters, it would mean candles that have big bodies like so, Okay, now this swing, this candle ended up in a doji, which is basically balancing itself out, but obviously tells you, okay, so if the market did drop, but it did recuperate, all of that drop, but it closed basically where it opened, right? Then we'll say that, okay, so on that month, a lot of things happen, but that's way too low for us to come in and place a level of support. So our first level of support is last month's low. Our second, in this case, could be basically the another level that a price level that jumps at you, and I like looking at round numbers. So 20,400 could be a level of that, and by doing so, I want that level or that line to touch the most candles as possible. So it's touching 1, 2, 3, 4, and basically almost 5. So at least 4 levels of four candles is touching. So there we have it. Then we want to come down and take a daily basis, right? And on a daily basis, which is what we want to be taking a look. So we have the high, we have the low, which is somewhere in the back, and we could have saying, okay, in that sense, do I want to on a monthly chart? I saw my support, but it was nice. It was a levels that I could be reached, but they were now on a daily basis. They're too deep. They're too far out from what the market fluctuation is. So here I'm gonna readjust my support. I'm gonna leave my resistance levels as they are, but I'm gonna use a level of support that makes more sense to me. So therefore, 21,400 jumps at me. So I'm going to use that in a daily chart, my first level, and then I'm gonna say, okay, so the Bollinger Bands in itself can be used as level of resistance and support. So why not use that level, which a lot of times the market does rebounds of those bands, just like it has done right here, even though it dipped a bit lower than where the band is, but we can use that as a daily support level. Okay, so therefore there we go. So that's our support, our levels for today. Resistance support for the Nasdaq. Okay, the direction is to the upside. Momentum is picking up, so I'm going to be bullish and go with it. Then we do have, let me just erase these lines. Let me also turn this one into red because I'm going to use it as level of support. All right, so you can go in and do the same if you want for the Nasdaq, for the S&P. So as for the S&P goes, I'm gonna change this to green also. Okay, so as for the S&P goes, I'm going to use the first level 60.75 and the second level of resistance, that all-time high right around here, and then the first level of support 59.75, and then the second one will be that lower Bollinger Band. So therefore, there we go. All right, so again, also momentum to the upside. So going long, the indices, starting the year with a bang. Now the Dow has fluctuated a whole lot lower than its peers. So therefore, let's just use the lower Bollinger Band as a second level of support, and then the 50-day moving average, which is just basically right across 1, 2, 3, 4 candles. So when you see that, you want to use that that moving average as your probable level of support. Then resistance, we're going to use the 20-day moving average within the Bollinger Band as a first level of resistance, right? And the second level of resistance is going to be 44,000. We might just leave that for the entire week and see if by Friday we'll be reaching that level. So there you go. You have that for the Dow Jones. Then we have crude oil. Crude oil has been just on a tear, just moving higher, higher, and higher. So now in this case, $75 is where the market is speculated to reach. So let's use 75.5 as our second level of resistance, and let's just leave those levels right there where they are for our level of support, 73.5, and the low of last week of January 3rd. So the RSI is creeping into being overbought territory. So let's see, we are walking the bands. Now another tool that you can use is the trend-based fib extension to identify a continuation of this trend. So you want to measure all of this move from this beginning. So from this low, from the wick to the high of the previous movement to where the low of today is. And basically, if you take a look, we use the Fibonacci numbers, right? Extension numbers. So we can also just use, in this case, I'm going to use that 0.38% because it's a Fibonacci number. And look how where the 0.23% is, which is basically right where I initially placed my level of resistance. So you can use that. So you're measuring all of this move and see if the market will continue its trajectory. Now, why all of the move? Because if you just measure this one, you're not gonna get the true application of the tool. So you want to measure all of this move to see how much of this move will this candle move. All right. So initially, yes, it says that the golden ratio is where the market should come to, right? But that's pretty high up there. Now it could also get there. It doesn't mean it'll be there. It has to get there by today. We could probably reach that by the end of the month, or by the end of the week. So that's how I use the trend based fib extension. And again, why all of this? Because the trend is a trend. We are in a trend, uptrend. Okay. So there you go. Then we have Nat Gas. Nat Gas. All right. So we see Nat Gas. Look, Nat Gas last month on the 30th, it made that move to the upside, and since then, after obviously that big gap up, which has been already closed, and it's continued to move. So I mean, now in the States, that's where obviously this month is going to be very, very cold. So will the demand be there? Yes. Now on the other side, also the Ukraine scenario that they're saying that they're not going to continue to provide Europe with Russia's gas because they cut that off. So therefore, the United States needs to come up and step up its production, and because of the demand that is going to be obviously there. So again, I am going to speculate that we will be moving higher and taking up a probable shot at revisiting that high in Nat Gas. I'm going to use the upper Bollinger Band as my first level of resistance and that high as my second one. As my support goes, I'm going to use the 20-day moving average within the Bollinger Band, and the second one will be 320 just because it jumps out at me. Okay, so let's use the RSI. It's not even close to getting into the overbought territory. So going long, Nat Gas, gold. All right, so gold. We'll see gold this year trading above 2,700. Well, as fireworks began happening, as President Trump begins his presidency, what will he say? What will he do? Will that cause a lot more geopolitical uncertainty? Will that make obviously people flock to a safe haven asset, which gold has always been? Yes, that's most likely what will happen. So as far as support goes, the 50-day moving average is just jumping at me. So I'm going to use that as my second one, and my first one, I'm going to use 2610. As far as my resistance goes, I'm going to use that previous high as my second one, and my first one, 2650, just because I traded around 2650, and it's a level that just jumps at me. Basically, we have been there almost today in that, so therefore it worked as a resistance. You see, so it did work as a resistance, so therefore it hasn't been broken, it hasn't been violated. So let's use that level as resistance, and let's assume that this particular movement to the downside will be met by supporters, buyers, and and make the asset give it a U-turn, a reversal. Long term, I'm bullish on gold. Then we have silver. Silver, okay, so silver has been just also looking to make some recovery to the upside. Let's see how much of a recovery will it do. Support that lower Bollinger Band. That's the second one. And the first one will be $29. Then we have that 50-day moving average, which market almost touched it, but it retreated from it. So, and the second one will be $31. So again, also being bullish with silver. Then copper. Let's take a look at copper. Copper, oh wow, parabolic movement as we speak in copper. So second, lower Bollinger Band. First one, $4, because it's a round number, and that previously it has, look how the market has been around it. Okay, so the market has been around it, even though on the 31st it did fluctuate much lower, but on the first, also on the second day of trading, we did kind of recovered, and we basically have done a triple bottom here. Looking at the wicks. So we could also have used that as a level of support, but I prefer using the lower Bollinger Band. You could also use this triple bottom, see, triple bottom, because the wicks are basically touching on the same level. So therefore, from here the market has rebounded. So let's hope that it will continue. As far as resistance, the 50-day moving average is going to be my first one, and then the upper Bollinger Band. It's going to be my second one. So going with the momentum to the upside, buying the copper. Then Bitcoin. All right, so Bitcoin, it hasn't been able to trade above or reached or come back to 100,000 this year. So let's see if that will change today. There's a lot of momentum to it. And you see how the bands are pinching. This is called a pinch. Now, if they were a lot more closer like this, then most likely this will entitle that the market is going to break out most likely to the upside, okay, because of the trajectory of the candle, because of the upturn that it has been having. So basically this is volatility just building up, okay. So therefore we most likely be getting ready for a breakout of this particular asset. So let's use initially that top, the top Bollinger Band, 100,004, just because it's a nice round number. Everything, even though it has fluctuated even higher than that. So let's just leave that there though. Okay. So 104,000, second one. Our first level of support is going to be that 20-day moving average within the Bollinger Band. And the second one, which is where, let's just clone this puppy. All right, clone it. All right, so the second one, let's use 94,000 as our probable level of support. All right, so there we go. We have our levels. Let's use now the currencies. The euro has just been just on a tear. It is looking to recuperate. It is fluctuating to the upside. We have had obviously some more news coming out of the ECB, German production coming up this week also. So let's see if after making that low that it hit the last time that it hit it, it was back in November. So let's see if today we continue to move to the upside. To use the 20-day moving average as our probable level of resistance, we have violated it. We have fluctuated above that a bit. So I'm not going to use it in this case. 105 is going to be my second level of resistance. Support, the lower band, and that low is going to be the level of support. I'm looking for the market to continue moving to the upside. Let's see if by the end of the week we'll be above 105. Depending obviously on what happens with the data coming out this week. Then we have the pound. So we are way below the levels that we have placed last year. So that low is going to be my second level of support, and then the lower Bollinger Band is going to be my first level of support. My first level of resistance, that 20-day moving average, and the Bollinger Band, and 126.5 is going to be my second level of resistance. So looking obviously for the market to continue to push higher, and that will happen as we see how the dollar index retreats. It is looking as it's going to do a major correction. So from the last high that we see here, and that's 109.344 times 10%. 109.344 times 10%, 10.9, so 98. Okay, so 98. Will we come down to all the way to 98? 40, 10%, somewhere around here. That's a whole lot. It's a whole lot of market trajectory. So I don't think that will happen today, but it is trending lower. So, but you see where it stopped. Look at this. This could also be called a volume cluster, just because, or a range, trading range, horizontal move, previous horizontal move, equal highs, equal lows, and then a breakout to the upside. Now this level right here is being used as a support. See how it has fluctuated into it and just rebounded, being absorbed by buyers. So let's see if that will be the case for dollar index, or will continue to fall. If it does continue to fall, we'll see a nice move to the upside on the currencies and the metals and everything else. All right, that's it for me today. Have a great trading day. I'll see you tomorrow.